we have Santosh Rao, Head of Research Partner of Manhattan Venture Partner, joining us as well. Hi, welcome to the
Morning.
show, Santosh. Morning to
Thank
you
you.
and a happy new year to you as well. First of all,
Same to you.
just want to understand the overall picture, with the India-US trade talks going on picture, the rates essentially coming back to 15 to 16% from the 50% of high rates that we are looking at. What could this imply for India?
Yeah, this is absolutely a great news. We were waiting for this. So tariffs were unnecessary disruption. Things were moving along. 15% is still high, but that's okay. It's much better than 50%. And so I think that'll benefit a lot. We saw some of the retail companies reporting or complaining that prices have gone up with this Indian tariffs. We saw some furniture companies say that as well. So it's going to definitely help US companies, but India a lot more because they are feeling the pinch of exports going down. So I think that it'll help them a lot as well. So net, it's going to be very good, very positive, and back to a normal state of affairs at this point. And we hope it happens soon.
Right, so Santosh, just on that, if we have to delve deeper into it, a couple of topics which are there for the negotiation includes energy as well as agriculture. Now, today only we've seen that there have been new fresh sanctions against Russian oil firms as far as where that is concerned. We've looked at an uptick in terms of crude oil prices as well. So just want to understand the overall picture here. What could be on the cards for India? What could be the topics of negotiation that we are seeing and the overall outcome of this particular meet that we are looking at?
Oh, with the US, I'm assuming that's what you're talking about.
Right.
Yes, I think it's going to be more very broad based. I think India is on record saying that they have diversified their oil purchases. So I'm sure it's going to be minimal. It's going to impact quite a bit because we are a biggest purchaser of Russian oil, but it has been coming down, and there is plenty of oil around the world. So I think India can go to them and keep the prices down hopefully at some point. Initially there is going to be some reaction to that in terms of pricing, some volatility, but I think overall it'll be okay because there is tremendous supply all over the world. It's just a question of getting moving away from Russia and going into other places. So I think I don't see any big disruption in the oil market because of this. But US, India needs to find another place. The cost will go up initially because we are getting oil at a much better rate from Russia. So hopefully we can get that similar rate around the world, or India rather can get similar rates around the world. So initially there is going to be some adjustment there, but I'm sure in the end, and hopefully by then the war will be settled. I mean, Trump is talking about talking to Putin on and off, and he's definitely everybody wants to settle that war. So I think
Right.
if that can settle, then of course we'll be good to go. But until then, you'll see some slight volatility, but not that much.
Right, Santosh. So just on that, I want to get your sense in terms of gold versus equities as well. Now, on one side, we are seeing an overall positive sentiment coming back for the Indian markets with FIS flows back in the picture this month. On the other side, gold prices now they have nearly seen a 6% of a drop or so. There's an increasing volatility in this particular counter, gold, silver, both of these commodities, if we speak about them, with the analysts now saying that the prolonged rally that we've seen is now overheated. So just want to get a sense for these two as well. Equities versus gold, what's your view for both of these?
Yeah, I'm upbeat on equities because there's tremendous incentive tailwind coming into the fourth quarter. The Fed is going to cut. The capex spending is still going on, and the market is still good. I mean, economy is healthy. The companies are reporting good numbers, so I think that's a good tailwind coming into this. Yes, we have the softening labor market on the other side, and some consumer sentiment cooling down. So, but that's there. But there's going to be a tremendous seasonally strong fourth quarter. So we're going to end the year with solid momentum. Gold, there was talk about central banks buying a lot of gold, hedging against the dollar and all the other stuff. So I think has cooled off now. So I think gold will kind of come back a little bit, pull back, and it has started already. But equities will continue to do well, and that's the thinking right now because there's no reason not to go up unless there's tremendous tremendous disruption, some unknown disruption at this point. But if things are the way it is, I think things are moving towards settling down. We have some certainty about tariffs. We know where it's landing, other than few on the fringes. But essentially, we know where that, because that was a big variable that was holding the market back. Now that we know where it's going and the economy is going well, I think the hiring will start again at some point. When that the companies were holding back because they didn't know where it's going and where it's going to
Right.
land. But at this point, I think they have good certainty as to what's going to coming up in the next 2, 3 months.
Okay, an optimistic note is what we are looking at. Thank you so much, Santosh, for joining and sharing that overall outlook in terms of what's happening with the global side, as well as what this could mean for India.